All right, welcome back to the Explainer. Today, we are jumping headfirst into a world that moves at like the speed of light. A world of high stakes and split-second decisions. We're talking about day trading.
And that's really the big question here, isn't it? Can you really outsmart the market and turn a profit between the opening and closing bell? It's this super fast-paced game, and honestly, millions of people are drawn to it. So that's what we're going to do in this explainer. We're going to cut right through all the hype. We're going to break down what day trading actually is, how it really works, and, this is the big one, what it truly takes to even have a shot at succeeding. So, let's get into it. Okay, first things first, what is day trading? Before we get into all the crazy strategies and the risks, we got to start with the basics. Let's get super clear on what we're even talking about here.
Okay, so at its very core, day trading is all about one thing: speed. Traders are jumping in and out of positions within hours, minutes, or sometimes even seconds. The goal? To hopefully make a profit off of these tiny little price movements. And here's the golden rule. You are out of everything by the end of the day. No positions are held overnight. Ever.
And this right here, this is probably the best way to think about it. If long-term investing is a marathon, where you're patient and you're thinking about growth years from now, day trading is just a flat-out, all-out sprint. It's super active, it's intense, and the focus is entirely on what you can make right now.
So, where are these traders playing this game? Well, you'll find them in a few key spots. Stocks, of course, that's the classic. But lately, with all its crazy swings, crypto has become a huge favorite. The Forex market, where currencies are traded, is another massive playground. Then you've got derivatives, which are a bit more complex. They're basically financial contracts tied to something else. But what do they all have in common? They all have those fast, sometimes wild price swings that day traders are looking for.
Okay, so that naturally leads to the big question. When everything is moving this fast, how in the world do you decide when to buy and when to sell? I mean, it can't just be a gut feeling, right? Right. And that's the key thing to understand. For the pros, this isn't gambling, it's a discipline. So in this next section, we're going to open up that trader's toolkit and see exactly what they're using to make these split-second calls. Yeah, it is definitely not about just staring at a screen and hoping for the best. Traders use a core set of tools. First up is something called technical analysis. This is basically studying past charts and data to try and predict what might happen next. They use all these charts and indicators to find visual patterns, like maybe a stock keeps hitting a certain price and bouncing off. And then you have to take all that analysis and combine it with a lightning-fast decision-making. No room for hesitation. Okay, so they've got their tools, but how do they actually use them to make money? Well, they run specific strategies. You can think of it like a playbook for trying to navigate all that chaos. Let's look at 3 of the most popular plays you'll see. A breakout strategy is kind of like betting that a dam is about to break. You see a price stuck in a range, and the second it pushes through that wall, you jump on the trade. Scalping is, well, it's intense. It's about making tons and tons of tiny trades to just skim little profits off the top, hoping they add up. And then there's the pullback. This is where you see a stock that's in a strong uptrend, it dips for a second, and you buy it right then, betting it's about to keep climbing. Okay, I'll admit it sounds super exciting, right? It can be a total adrenaline rush. But with that kind of speed always comes high risk. And like anything that promises quick rewards, you've got to ask yourself, what's the catch? And honestly, this might be the single most important part of this entire explainer, because understanding and actually navigating the very real risks is what separates the people who have a chance from those who are just going to lose their money. Look, the challenges here are huge, and the stats are pretty sobering. Most studies show that the vast majority of people who try day trading actually fail to make any money at all. You're dealing with insane volatility where prices can just whip against you in a heartbeat. The emotional pressure is just intense. Fear and greed can totally cloud your judgment and make you do stupid things. And don't forget, you're making a lot of trades, so all those little transaction fees can add up and just eat away at any profits you might make. So let me be crystal clear about this. Risk management? It's not optional. It's not just a good idea. It is the absolute foundation for survival in this game. Without it, you are finished. Okay, so if risk management is the foundation, what kind of mindset do you need to build on top of that to even have a chance? This right here really captures the whole philosophy. You are not swinging for the fences here. You're not looking for that one big win. Remember the sprint analogy. The goal is to get consistent, small, repeatable wins that just add up over time.
So how do you get that consistency? Well, it really boils down to two things. First, discipline. I mean, real mental toughness to stick to your plan, to control your emotions, and to know when to just walk away. And second, you need relentless practice, and I mean relentless. That means practicing in demo accounts, studying charts for hours, and analyzing every single trade you make, especially the ones you lose, so you can learn and get better.
Because in the end, that's what this all comes down to. Day trading is not some get-rich-quick scheme. It is a high-performance skill. It's a game won by discipline, not by luck. And that just leaves one final question for you to think about. Are you truly ready to put in the practice?